Say good afternoon, everybody, by 1 minute, I think now. So my name's Daria Rippingale, and I am the CEO of Bankingblocks. And Bankingblocks is a wholesale banking and payments technology provider that works directly with payment and fintech businesses. However, we offer the licensing and the banking products as opposed to just the technology side of that. So we are licensed in Belgium as a payment institution. We're a direct acquirer. We're also a SWIFT and SEPA member, and we have an agency banking license through a Tier 1 bank in Europe. So that's just a little bit about us. What I'm focusing on today is basically licensed fintechs and how they are changing the game of B2B payments. And I think the topic that I will mainly be hitting home on is really core banking, which is something that I am a very strong believer in, for sure, and the way that that benefits the industry. To talk a little bit about business-to-business payments, so I will be basing everything on how licensed fintechs and challenger banks are making B2B cross-border payments easier, increasing speed and decreasing costs, why they're doing it better than the banks, and strengthening your core, why the core banking really is the impediment that most of traditional banks are dealing with right now, which is why such an opportunity exists for these challengers to take the market. So let's talk a little bit about the changing landscape of business-to-business payments. Christoph did a fantastic job of explaining a lot of the challenges that they're facing right now. So this is just a quick summary of the expectations that businesses have that have been driving this change as well. So business clients are now really expecting an integration of their banking services. They're looking for far more automation of processes across the board, which I'll talk more about. They are looking for modern access to technologies and APIs, and they're looking for a lot more transparency and access to cross-border payment methods that are fast and secure. And this is a huge challenge that is being faced by the banks right now. Banks traditionally have very siloed business structures, which makes integration of banking services very difficult. They have very outdated and rigid processes compared to more modern challenger banks, which makes automation more difficult also. And they have very competing urgent priorities right now, which I will talk about in the following slide. But they also have very fragmented intermediary reporting and intermediary corridor banking relationships, unless they're one of the major Tier 1 banks. And that's because a lot of banks have traditionally been focused on domestic markets or within a wider market, but still not in that cross-border wells to many different regions and areas. So these are the three main areas of challenges that the banks are facing in terms of taking the business-to-business payment market. And a really significant one, obviously, is new regulations. So GDPR was imposed, and it had very strict deadlines to adherence to have banks increase the control and the access of data for their consumers for deletion as well. And there was very high penalties. So although GDPR wasn't a very sexy topic for the banks, it was something they really needed to spend the last 2 years focusing on in order to maintain their security and longevity. At the same time, we have open banking and PSD2, and that's putting a lot more pressure as well on the banks to modernise their technology. And that is an issue because banks mainly were using very legacy technology systems. These are out of date, they're inflexible, and they have very poor quality infrastructure. A lot of the core banking systems that banks use today were actually built before the invention of the internet, and they've just been making small tweaks to that, but there hasn't actually been a huge overhaul. And this infrastructure overhaul is not insignificant. It's a huge cost to a bank, but it's also a very timely activity that they need to do, and it also means that they need to change a lot of the processes that they have internally. And as I mentioned before, banks really do work from a business perspective in very siloed business structures. Businesses traditionally, when working with major banks, have had multiple relationship managers across the different various products that they use, whether that's payments related or not. They've got a very lack of understanding across the bank in terms of what a business client actually does with a bank, unless they get a group of relationship managers together in a room. And so what I'm saying is that in addition to big technology overhauls that are required, there is a lot of operational and internal process overhaul that is required within banks in order for them to be able to elevate and step ahead and compete with the challenges in the industry. So I guess everybody would be a believer that there is a huge growth when it comes to non-cash business-to-business transactions. This is just a graph from a recent Capgemini study that basically just shows that it's a multi-billion-dollar industry and it will, of course, continue to grow. So this is not a market that the banks want to lose out on, but it's one they are at very big risk of losing. So banks are on a time frame to solve their own challenges, and fintechs really are taking the opportunity, as are challenger banks, to try and grab this very desperate market that wants better solutions. They're doing this by focusing on the primary pain points that businesses have. So they're offering a higher speed when it comes to transactions, which is very important. They're doing it at a lower cost, and in a lot of ways that's due to less manual overheads, which I'll mention more about. They have more transparency and more access to information for businesses. And that's not just access to payment information, that's access to information that businesses can integrate into their own companies to have a much more smarter business intelligence around decisions being made. It means they can reduce the number of people within a business organisation on the reconciliation side of business and accounting, which reduces their costs as well. And there's just endless numbers of opportunities and pain points they're trying to solve with that. So how are they doing it? Core banking. So it's the best of two worlds. So one of them is technology and the other is licensing. And so on the technology side, these licensed fintechs and these challenger banks, such as Starling, who have done a fantastic job at this, they're working on built-for-purpose banking technology. And that means that it's flexible and it's adaptable. So as new trends and new regulations come into the market, they're able to leap ahead of the banks and adopt those a lot faster. And this works for them not only domestically but internationally. It means that they can, as new initiatives happen in cross-border and faster payments worldwide, they can integrate to those very quickly. And the focus is, of course, on reporting, connectivity and modularity. That's something Bankingblocks is very proud of ourselves, as you would tell by the name. And the other thing that they do is that they're providing a much higher level of automation with lower manual overheads. So they're offering the same or better services at a reduced cost, and they can provide faster onboarding and support. So the other side of it, of course, is financial licensing. So great to have technology, but if you can't actually issue the payment or banking products, it's really not going to beat the banks. So with payment institution and electronic money institution licensing, it's allowed these licensed fintechs to directly provision the business-to-business payment services that large corporates need. And the licensing is not a bank license. It's directly focused on payment services, which is, again, a further catalyst for these licensed fintechs and challengers to actually provide better quality, faster and cheaper services for corporates. With this licensing, you can have access to SEPA and SWIFT, card schemes and alternative payments, plus you have the more modern technology. So you really are in a position where you're actually covering the full ecosystem from a business-to-business payment perspective that is more dedicated for them. So it's really allowing licensed fintechs to replace banks in the business-to-business payment market, not all of them. So again, how are they doing it? So the focus for these licensed fintechs, again, is trying to target the pain points that all of these businesses are having. And that's through fast onboarding processes, digital identity tokenization, which also helps with portability. But that's also fast onboarding from a business perspective that is maybe moving into new markets. Businesses grow and change, and as the world economy becomes smaller and smaller from a connectivity point of view, they start sending money into different regions that the banks traditionally have not approved them for. For a corporate to maybe start sending money through to Senegal, they might need to go back to their bank, apply with their bank to add this to their risk profile, and wait for that response. And that could take months. And it actually does. I've experienced that with our own business, not in Senegal, in Australia, of all places, from Europe to Australia. And so the technologies that these licensed fintechs are providing actually allows for a lot more faster risk management, risk assessment, and therefore approvals for businesses to actually continue growing and generating. They have the open configurable APIs that PSD2 and open banking are demanding, and that the customers are demanding as well. And that is integrating into businesses so that they have much more intelligence themselves. That's in terms of their own payment habits, how their P&L works. It helps them, as Christoph was saying before, to actually reduce the amount of time between when they have to invoice a customer and receive a payment. There are so many different things that this transparency of payments adds value to corporates from. They're also using more modern technologies such as distributed ledgers and blockchain and Ripple to make payments faster, which reduces risk significantly for corporates. And that financial exposure risk is a really huge part of the piece that the challenges are taking away from the banks. That means less deposits, less security for large corporates, and more access to funds on a daily basis to be able to grow their businesses. They're able to integrate to new faster payment methods that are coming into the market. We have SEPA Instant, UK faster payments, we've got cross-border money send. These products add so much value for businesses, but the majority of banks don't currently support them. And when I say the majority of banks, I mean literally 95+% of banks don't support them. But the licensed fintechs and challengers can, because they're built on nice modern core banking technology, which I'll talk more about in a moment, which really is what's helping them. And then the other thing, because of their technology, is they're able to provide these integrated solutions. And so we're seeing the rise of marketplace banking and Lego banking, and that's being driven by these technology-forward thinking licensed fintechs, not by traditional incumbent banks. Cross-border business payments demand is here. I don't think I need to talk too much about it, but we are not a domestic world that we will live in anymore, and we have had so many impressive, yet still not implemented, activities happening from governments worldwide to really try and help and assist businesses and banks in allowing the transaction of cross-border payments a lot more easily. So, how are these challenges beating the banks? As I said, it's all in the core, and that's the core banking technology that these challengers and fintechs have. I know I keep talking about it, and you've got about 3 more minutes of hearing about it because I'm a real true believer in this. So in the rise of modern open banking and the requirements from regulators right now, banks are not prepared. It requires banks to offer modern APIs, and the biggest hindrance is their outdated core banking technology. These systems are not compatible with request-driven APIs, which means that banks right now are either trying to do a quick fix and wrap a light banking solution around it, or they're actually having to build more internal departments to deal quickly with requests, for example, ones under GDPR, which is actually increasing the cost for them, but not actually opening the market up from an open banking perspective. This was an Accenture report that I find highly embarrassing for the banking market that happened last year. And so basically it was looking at, when does your bank plan to make investments in open banking for corporate customers? And the reality was 45% said they had started to invest last year, 50% said they were looking to invest this year, and another 5% didn't really have an idea yet. So what that means is 55% of banks haven't even started investing in this. And 45% have, but that doesn't mean they're ready. So, that really means there is this very big opportunity for these licensed challengers to take the market. Core banking is way sexier than it sounds, and I really believe that. It's giving these licensed fintechs and these challenger banks all of these benefits that they can give to their customers. Lemonetic was speaking a lot about the biggest issues that banks have in terms of the speed of reconciliation, the movement of funds. All of this goes away if you are using good, modern core banking products. It makes faster speed of payments and reduces costs. You have new payment methods that are available very quickly to help support businesses. It gives them access to smart data. That's not just payments data. That's data themselves about how they work with other suppliers, how they work with other businesses. It helps them make internal decisions to increase their own profit margins. And it also gives them access, any core banking system, whether it is a bank that uses it or a licensed fintech or a challenger, it allows them to add that Lego piece market banking, which gives more utility. So fintechs are advancing well ahead of traditional banks in terms of open banking, and that is obviously the point I am continuing to make. And despite some very poor investments that banks have made so far, they're still mainly relying on technology from the 80s and 90s. So until the banks modernise their core banking, they're slapping lipstick on a pig, and that ain't going to cut it. So, core banking really does underpin the future of business-to-business payments. It's about adding that utility that businesses need. They have so many problems when it comes to reconciliation, providing services beforehand. As Christoph again was saying before, it removes all of these other cost centres for them too. You don't need debt collection anymore. You don't need to have credit and insurance for you as a company against pre-fulfillment of services, because you now can have instant payments and you can integrate all of these added utility value products for your business customers as an actual fintech. So that's from procurement and invoicing, payments and alternative financing platforms, and receivables and reconciliation. And so these licensed fintechs that have the good new modern core banking are able to open APIs very easily to integrate exactly what these businesses need to add that value, add that convenience, and add that utility. And their core banking systems are automated, and it means much lower manual cost. They do intelligent payment routing, much better monitoring and reporting, especially from an AML perspective, which also reduces cost of fraud related to businesses in terms of transactions. It does the business process management, and it's highly flexible. And that API goes both ways. So what that means is they're also able to add all of the additional payment methods, the networks worldwide, the different channels and corridors, much faster than the banks to add more value to their customers. I'm out of time, so you won't have to hear me read every one of these benefits to you guys again, but they are significant. So licensed fintechs make sense for B2B payments. That's what I'm trying to get across. And so why do businesses still bank with traditional banks? Well, this is new. That's one thing. The market hasn't shifted completely there yet, but it will more and more. And the only other issue that really stands in the way, and I've put the following question on the board because I get asked it a lot, and most people finish their presentations with this one, which is, will convenience or trust win out? Because the benefit that the banks have over these licensed fintechs is, of course, trust. But the answer is the fastness, the access to information, real-time settlements, and these other benefits that licensed fintechs are offering are removing that issue of trust that actually exists at all. They have real-time access to information. And so I truly believe that utility and convenience are going to win out over trust. Thank you.